Hello, ladies and gentlemen. Good morning to you, and welcome to another morning live session as we take a technical dissection of the current market structure in order to decide what our potential trading opportunity will be for today. And as usual, we are going to be reviewing all the pairs that we have been monitoring so far since the beginning of the week. And surprisingly, we were able to scope in some couple of pips in most of the US dollar pairs during the course of the last 24 hours. But lately, we're beginning to see that the market is beginning to normalize following the Easter holiday, and the US dollar at this point in time has been finding it very difficult to gather that strength with a potential trend continuation. But I'm of the opinion that we might likely be going through a retracement of that impulsive move that started yesterday, but we are not yet confident that that is going to be the case here. So we are still going to be monitoring price action. We are going to be looking at the chart to see how we are going to be managing those trades in anticipation of another phase of momentum. So welcome once again to my morning live session, and I would like to state here that most of the pairs and instruments that we are monitoring are a result of my weekly publication. That is why I always advise that you have a review or watch that video so that you can have a background knowledge of what we are going to be talking about here, because what I'm going to be reviewing or analyzing during the live session will basically be around the 1 hour time frame scope. So I will not be going into the higher time frame, so it is better and more easier for you to relate with me if you had watched those videos. So I've dropped the videos in the details in the description box below, so try to check them out after the live session if you have not watched them, so that you can have a background knowledge of what I'm talking about here. And then due to demand, I already have another platform that's on the Telegram channel, which luckily I've been trying to do some updates on that regard. So you can check the ID to the Telegram channel. Will be scrolling at the bottom of your screen right now. You can check it out and join me there as we continue to monitor price action after the live session. So that is that on today. So welcome everybody once again, and if you can hear me, let me know in the comment section that the audio is good, the video is good, and then you can see my screen too as well. So with that being said here, you know what we do, especially when we come in here during the morning live. The first thing we want to be doing is to keep tabs with the fundamental aspect of the market, and that is the looking at the economic calendar to see if we really have any high impact event that will be affecting the instrument that we have been monitoring so far this week. And looking at the calendar today, Tuesday, April 11th, we do not have any macroeconomic event to look forward to today. The only one we have here is for the euro, and since we don't have any of the euro pairs on our watch list, so we shall be skipping the economic calendar today, and we diving right into the market structure using our technical skills to take a position. However, it is important I state here that even though we don't have any macroeconomic event today affecting the pairs that we are monitoring, it is very pertinent that we also take into consideration the macroeconomic event that are coming up tomorrow, as the market will be anticipating this event, and we shall be seeing the reflection of this anticipation on the chart as price action. So for tomorrow, from the US docket, we have the consumer price index. We have the Bank of England's governor tomorrow as well, who is going to be having a speech, and that will also be giving us an inclination into the health of the UK economy as well. Then on that same tomorrow, we have in the FOMC minute, which is an event everyone is looking forward to, as it's going to be deliberating on the future interest rate decision from the Feds, and this will give us an insight into what is likely going to be happening in the month of May as regards the interest rate hike. So these are events that we are going to be looking forward to, and I think that the market will also be anticipating that, and we shall be seeing that on the chart too as well. So we are going to be taking all those ones too into consideration. Thank you, Daily. Good morning, Daily. I'm glad to have you around, and thank you for that confirmation that the technicalities are good. So with that being said here, let's dive right into the business. So as usual, the first instrument that we are going to be taking this morning is the US oil. And on the US oil here, from the look of things this morning, price action has continued to remain choppy across the market. And I actually did some update this morning on my TradingView platform, which I laid emphasis on this. And let's quickly run through how the week has started for us on the US oil, and what did we say is going on in the market, and how did we say that we are going to implement any trading opportunity at this point. So if you remember, yesterday we talked about the consolidation phase that started last week following that bullish gap, and following the OPEC Plus decision to cut oil production. We saw that huge 48 pips gap that happened at the beginning of last week's trading session, and everyone in the market were looking forward to a sporadic rise in price due to the cut in oil, due to that decision. Though we are not going to be, the cut is not yet implemented yet. I think it's going to start in the month of May, but the development itself, that news itself, will send a spiral into the market, and everyone were thinking that we might likely see a rise in price during the course of last week, but that did not happen, as we saw how price action went into a choppy situation. And this might be as a result of the US trying to balance the market by increasing the oil production into the market so that it can stampede that potential rise in that. And we're beginning to see that happen in the market. And throughout the course of last week, we saw our price action traded within the $81.20 level and the $79.50 area to give us an indecision in this market. And anything could actually happen from this current market structure. We could see price action skyrocket to the upside if it breaks out of the resistance line of that channel, and we could see a retracement to the downside if price action breaks down the support line of that channel. But one thing we did here yesterday was to try to understand how participants in this market are actually reacting to this current structure so that we can decipher what our next line of action would be. And what we did here yesterday was to look at what has really been happening. And if you look at what happened since the early hours of yesterday, we saw how price action was initially trapped between the $81 level, which happens to be the resistance line for this week. That is the highest zone that price action has ever been for this week. Then we also have the support line for the week at the $80.45 level, as you can see here. And you all know what we look out for whenever we have this kind of simple setup. We want to see price action either break out or break down of the structure for a trading opportunity. And this actually happened during the first hour into the New York session yesterday. We saw the breakdown of that structure, which triggered our sell position at that particular point in time. And immediately price action moved significantly well in our favor. And I told us all yesterday that we should be securing our sell position, as we never could tell price could turn around to the upside. And for the sake of clarity here, I would like to share with you my publication on the TradingView platform where I updated this. So this was what we saw at the beginning of the trading session yesterday. And though we had some attempt by the buyers to climb to the upside, but this was not strong enough, as we saw sellers take out all the buying expectation in this market, breaking down that $80.45 level. And at this point, we had our first sell position for the week. And I told us all here that we should secure all sell positions, as we don't want to lose whatever we had made so far. And look at what happened. We saw our price action climb back to the upside, taking us out of our sell position, probably with a small profit. And if you had moved your stop loss to your entry zone, then you would have been taken out at break even on that single trade. So we're still safe on the US oil at that point. Then I told us all that we should be having an entry back at the $80.45 level with the hope, because I said position with a small profit as we return to the status quo. That means we return back to where we have started. So with a sell stop order below the $80.45 level the second time, we had the sell position triggered here. Price action moved in our favor for some time before we begin to see buy pressure resume at the beginning of this morning. And I stated here this morning that the choppy situation continues, hence we need to be patient for structures to mature for trading opportunities. So at this point, I really did not know what to do here because I needed to see further confirmation. Though we had price action come back into the $80.45 level. Let me show you this on the live chat so that we can see things more clearly here. So at this point, we saw the breakdown of that support line yesterday, and then we saw price action do a retest of the structure. So the next thing that will come to your mind is that price action is likely going to be dropping to the downside with a trend continuation pattern. But one thing for sure you would not want to ignore at this particular point in time is the continued buy pressure around the $79.80 level. And because of this situation, I was very doubtful of actually joining a sell momentum from that area, as I need price action to break down the structure to be able to join a bearish move to the downside. And if we zoom out a little bit and look at what has been happening around that structure since last week's trading session, you will see that that area is a strong demand zone, as every attempt by the sellers to break down that structure has been met with strong resistance from the buyers. And for the sake of clarity here, it is very appropriate that we acknowledge this demand zone here by highlighting it. So let me just do that quickly by giving that area its due acknowledgement. So we have the demand zone there, and I'll be placing this right inside the box so that we can have clarity to that. So we have this one here. Hold on a second, let me increase the font. Okay, so we have the demand zone here, which has been negating all attempt by the sellers to continue to the downside here. So because of this morning, I said we shouldn't be doing anything yet, as we want to wait for price action to give us a mature structure to trade. But I think about 42 minutes ago, I shared this update on my TradingView platform. That is on the 15 minutes time frame. I was able to spot a tradable structure where I noticed this bullish momentum, and to further emphasize that, we connected a series of higher lows which gave us that bullish trend line. And considering that price action is doing a retest of that support line that was broken yesterday rather, I was of the opinion that a breakdown of that trend line will give us a bearish signal. So we want to see a breakdown happen, then price action do a retest of that structure with the appearance of selling pressure right below the $80.45 level to give us a confirmation to sell the US oil for today. So that is what we are still monitoring right now. We are still looking at the chart right now to see if that will happen. So if I scale down to the 15 minutes time frame, the live chart here, this is what you will see here. So right now we have the trend line. Let me see if the trend line is well situated here. Let me readjust if it's needed. Okay, so it's still very okay. So we have this trend line here, which emphasizes the bullish momentum since yesterday on this chart. So since the later part of the New York session yesterday, we have been experiencing that bullish momentum, which coincidentally is springing out of that demand zone that we just identified earlier. So now the question at this point is price action coming back to retest the structure that was broken yesterday. Will that turn out to be a trend continuation, or will this turn out to be price action respecting this bullish trend line here to incite another wave of bullish momentum to the upside? So these are things that we want to be looking at. And for us to sell at this point, I need price action to break down that bullish trend line here. Then I look forward to a retest of that structure to happen right on our lower time frame. We could go to as far as our 10 minutes, 5 minutes time frame to look out for the setup. Then selling pressure, then we want to be part of this bearish move to the downside. So this is what I will be looking forward to today to give me a confirmation to sell the US oil for today. However, if price action does not come back into structure and instead we continue to see lower lows in this market, then I already have a setup here around the $80.27 level here. $80.27 exactly. I think so. Hold on a second. Okay. $80.25 level. Let's label this one. Okay. I'll place this at the top, bottom right hand side. So if price does not do a retest of that structure, then we might be in for a sell momentum if we see sorry about that, if we see an outright breakdown retest of this area here at the $80.25 level to join a sell momentum from this point. So that is how we are going to be selling. So what this simply means is that as long as price remain below the trend line and the $80.45 level, we shall feel comfortable in our sell position. However, if we have a situation here where the buy pressure that we are noticing here continues in such a way that it breaks above the $80.45 level, then definitely we want to be seeing this as a trend continuation to the upside, hereby respecting that bullish trend line that we just identified here one more time. So this is what we shall be looking forward to today. Then a further breakout of the $81 level, which happens to be the highest point price action has been for this week, will definitely be welcoming more sell buy position in this market. So let's be on standby for these opportunities in this market. So that is that on the US oil. If you have any questions, let me know in the comment section below. So moving on now, we are going to be talking about the GBPUSD, that's the pound sterling stroke the US dollar. And let's run through what happened yesterday. So this is what we have here since the beginning of the week. Before we go into that detail, it's very important that we take note of how price action had evolved into this current structure. Now, if you look at this situation here since the beginning of last month, you would have observed that price action has been very bullish in this particular market. And to further emphasize the strength of the buyers in this market, we had this bullish trend line figured out on our 4 hours time frame. Let me show you that in a moment so that we can all be on the same page here. So this is it right here. So this is the bullish trend line since the beginning of last month's trading session. And during the course of the live session yesterday, we acknowledged the fact that we are within a very, very critical confluence where price action was trading just right around the trend line, where the potential of either a buy opportunity or sell opportunity could actually happen. And we talked about, if we are going to be buying, that a breakout of that trend line, that bearish trend line here, which has been supporting the bearish momentum since Tuesday of last week's trading session, which at this point we were thinking it's going to be a retracement of that impulsive move that we might be getting ready to buy at that point. And we also acknowledge the potential of price action breaking down the trend line for the first time in the last 3 to 4 months to incite a bearish momentum. And as you can see what happened here yesterday, we saw the breakdown of that trend line for the first time. Now the question for today is, will this turn out to be a move to the downside where we've already cited the breakdown of that structure? And is this a sign that the trend line is no longer strong to hold that bullish momentum anymore? So these are questions we are going to be looking at today, and we shall be answering them on the lower time frame. Or will this one turn out to be a false breakdown where a bullish momentum could spring out anytime from now? And if you look at the structure from a technical standpoint, whenever we have a significant breakdown of a key structure like this, we expect that price will at one point in time come back to do a retest of the trend line that was broken, and with the appearance of selling pressure on our lower time frame, we shall be getting ready to join a trend continuation to the downside. So this is what we are going to be looking at today, as we have been seeing buy pressure as soon as price got into that key structure at the 1.23500 level. We've been seeing buy pressure resume since the New York session yesterday. So let's scale down into the 1 hour time frame to see what is really happening in this market. So during our live session yesterday, we acknowledged that price action was initially trapped between the 1.24350 level. As you can see here, we had a consolidation phase around here, and we saw the breakdown of that support line at the 1.2400 level to trigger a sell position yesterday. And in fact, we were lucky enough to be part of that move, as price action moved about 54 pips thereabouts before that bullish momentum happened. And I told us all to secure our positions on my public platforms, where I explained that we wanted to secure that position. Let me show you in a moment so that we can see things clearly here. So we had our sell position triggered here. So this was what I told us here this morning. We are looking forward to breakout or breakdown. So we saw the breakdown here. I said secure the sell position as we witness our first sell position for the week. Then we saw our price continue to find buy pressure. Then I told us all to secure sell position as we remain patient for more opportunity to sell. Let's see how far the current retracement will go before another wave starts, waiting for reversal patterns to mature. But unfortunately, we never saw any reversal pattern at all happen around that area, as price action took us out of our positions at the worst case scenario of break even. So if you had locked in some profit at probably 20 pips, you would have been taken out with 20 pips. But if you had locked in yourself at the entry point, you would have been taken out at break even, which is not bad at all at this point. So with the situation we have right now, we have a situation where price is back into that resistant line where price action started this week. And one thing about the resistant line at the 1.24350 level is the fact that it also shares a beautiful confluence with that bullish trend line that we identified on the 4 hours time frame. Now, the question we are going to be asking ourselves right now is, how do we intend to trade the GBPUSD for today? Now, are we going to be selling or are we going to be buying the GBPUSD? Well, if you look at the structure here, price action is currently trading above that resistant line, which we are not sure this is a valid signal that we want to be buying at this point. So we still need some confirmations to happen here before we could join that rally, if that rally is going to be happening. Obviously, whenever price action breaks out of a structure like this, we want to see some level of buying pressure resume above that area on our lower time frame to give us that confirmation that we are looking for before joining a bullish move to the upside. And that will reflect on the chart in the form of price action doing some couple of retest of structure, buy pressure on our lower time frame. Then we could actually join that rally to the upside, and if that happens, we have a buy stop order above the 1.24500 level, where a breakout of that structure will at this point be giving us another opportunity to add more position to our existing trade. So at this point in time, we are at a very critical point, so we need to be very, very patient and careful around this area. So let's see how this candle is going to close, probably in the next 30 minutes, to see how it's going to close. If it closes like a shooting star candle, then definitely this might turn out to be a retest of structure that was broken. Remember, this trend line was broken here. So if it closes in form of a shooting star candle, then this might be a retest of structure. And if we scale down to our lower time frame, the appearance of selling pressure below the structure will definitely give us an opportunity to sell. So let's keep all this perspective in mind as we continue to monitor price action. So we need to be very patient here. So let's hold on, wait for price action to finish the reaction around the 1.24350 level before we are going to be making a decision here. But be rest assured that I will be with you in the comment section on my public platform to give you an update on what I think could actually happen around that area. So I'll keep you posted on that one. So on the GBPUSD, we are on hold, waiting for a mature trading setup to come in before we make that move. So that is that on the GBPUSD for today. If you have questions, let me know in the comment section. Then moving on right now, we are going to be going into the XAUUSD, which is also one of our profitable trade yesterday, as we took advantage of that selling pressure around the $2,000 mark, and we had the opportunity of being part of a move that went to as far as 185 pips in our direction before we started seeing buy pressure resume around this area here by taking us out with some small profit. And I hope you are able to move your stop loss. Like I told you on the public platform, that we need to secure the current sell position by moving our stop loss into a territory that will help us to hold on to at least a small profit, just in case price action takes us out of the position. And as we can see here, price action has climbed up, and look at what we have here during the live session yesterday. This was what we were able to identify here. So the first structure that is significant here is that trend line, and look at what has been happening here since the midweek of last week's trading session. We saw how price action has been bearish, and when we connected the series of lower highs in this market, we had this bearish trend line, which further emphasizes the strength of the sellers in this market. However, what we saw here in the last 4 to 5 hours now was that breakout of that trend line. And if you look at the structure of the breakout of that trend line here, you would notice how that level also shares a beautiful confluence with that $2,000 mark. And you remember how important the $2,000 level is. At the beginning of the week, I told you that the $2,000 mark is going to be our yardstick for trading activity for this week. So what that simply means is that when price action is below that key level, we shall feel comfortable in our sell position, and if we have price action trading above that key level, we shall be getting ready to buy the gold for the week. And this was what I shared here on my public platform this morning on the gold. I told us all that we should be getting ready to buy the gold when price action. So this is this morning. Okay, hold on. So we have the situation here. Okay, this is what I said here. So after being taken out of the sell position with a small profit, we look out for new opportunities this morning. Then the appearance of buy pressure might lead to the breakout of structure today. So we shall look at this in detail during the live session. So I illustrated here that we are going to be buying above the $2,000 mark here, as you can see on your screen right now, as we begin to see the buy pressure that resume at the 1,989. And if you are taking advantage of that opportunity there, kudos to you for being on standby to catch that move, as you will currently be running with about 50 pips in profits thereabout. So what you are going to be doing right now, I will be advising you to move your stop loss a little bit closer to your entry point to secure some of this position, as we want to see how price action will be reacting above that $2,000 mark. And one of the technical understanding we know from a theoretical perspective is that whenever price action breaks out of a significant structure like this, in fact, this is a very significant structure, a trend line which shares a confluence with that $2,000 mark, which was initially our highest point. And if we look at the $2,000 mark, let me scale up into the 4 hours time frame here so that you can see things more clearly here. So this is the $2,000 mark here. You will see how important the $2,000 level has been in this market in the last 3 weeks here. So this was the first time price hits the $2,000 mark this year. We saw multiple rejection before the breakout of that structure happened during the course of last week. We saw price action retrace into structure, and right now a breakout of both the trend line and that $2,000 mark has a very high tendency of pushing price to do a trend continuation to the upside. So with this information we have here right now, if you are already buy, kudos to you, it's okay. Now if you had missed out on that opportunity, well, you want to remain patient here, as there is a likelihood that price action could still come back to do a retest of that structure. So you want your stop loss to be right below the trend line so that you can be part of this move whenever price action does a retest of that level, in anticipation of inciting another wave of bullish momentum at this point. So this is what we shall be looking at on this one for today. Now if price action does not come down, I'm of the opinion that a breakout of the $2008 MAC has a high tendency of inciting another wave of bullish momentum. So at this point I will be advising that we place a buy stop order above the $2008 level. It could be somewhere around the $2008.70 area or 50-cent level to have a buy stop around that area, with the hopes that price action will continue to the upside from that level. So this is what I'm thinking of today. And the more reasons why we are going to be holding on to a bullish bias today is simply because of the buy pressure we noticed had that support line for the week at the 1,989 level. As you can see here, sellers were finding it very difficult to find a new low. So despite the fact that we are seeing lower highs in this market, we never saw any lower low since the beginning of this week. So what I will be doing here is to acknowledge this area as our demand zone for the week. So we have a demand zone sitting around this area. So let's label it the demand zone for this week. I'll be giving this a white color, 12 inside the box. So here we have a demand zone here already. So we continue to look out for more buying opportunity as long as price trade above the $2,000 MAC and the bearish trend line that was broken this morning. Now, as always, as often, you know what I always do. We are trying to be as flexible as possible. The financial market is a very fluid environment, and we need to be as fluid as possible to be able to make some profits off the market. So if the market is moving in a direction, and if it decides to move in the other direction too as well, we also want to anticipate that, to be on standby so that we can also catch that move. So in as much as we are looking out for buying opportunities in this market today, we cannot ignore the potentials of the sellers in this market. As you can see here, in the last 1 week, price action has been bearish, and using that, connecting the series of lower highs here, we have been witnessing a bearish momentum so far. Now in this kind of scenario here, if the opposite happens, but I doubt it will happen based on this current strategy, I doubt it will happen, but if it does happen, that price action continues to the downside, then we might likely be getting ready to join a bearish move. But what do we want to be seeing on the chart that will give us the confidence to be part of that bearish move to the downside? So from this current structure here, I would rather see price action break down the 1,989 level, taking out the buy positions around this area to give me a confirmation that we might be having a trend continuation to the downside. And if this happens, we want to scale down to our lower time frame to look out for signals or further confirmation in the form of a retest of structure, selling pressure below this level or below the trend line, where buyers are finding it difficult to climb above the 1,989. Then we could actually join that decline to the downside. But I doubt if this will happen. In fact, I doubt it will happen actually. So let's keep tabs on this one, and be rest assured that I will be with you in the comment section on both my trading view and my Telegram to give you an update in that regard. So well done to those who took advantage of the buy position here, and let's continue to monitor price action and looking out for more opportunities at the breakout of the $2,008 mark. So that is that on the XAUUSD for today. So we shall be moving on to the last pair for today, which is the USDJPY. And if you have any questions, feel free to drop your inquiries in the comment section, as I will be willing to be of help in that regard. So the next pair we are going to be looking at, and the last pair for today, is the USDJPY. Now, looking at the USDJPY here, it is quite interesting that we were part of that bullish momentum yesterday. Remember, we took advantage of this buy position at the site of buy pressure around this area. Remember, we were around here during the live session yesterday. I think we were around here where we cited this engulfing bearish candle. And one thing I made mention of here during the live session yesterday is that if price action finds it difficult to get into that 131.850 and we begin to see buy pressure above that structure, then this will be a signal that we are going to be going bullish. And if that happens, we want to be having a buy stop order above the 132.400, buy stop order above the 132.800, and buy stop order above the 133.500. So we actually figured out all these structures during our live session yesterday with the hopes that we are going to be catching that move. And in fact, we were able to join those moves, and we closed this trade with about 180 pips thereabouts after moving our stop loss accordingly on both occasions as price action continue to move in our favor. So this is the setup here. This is the commentary. So we had the first buy position, we had the second buy position at the breakout of the 132.800, and the third position was triggered, and at this point we were running with about 240 pips. I told us all to secure all buy position, and you would have moved your stop loss to the entry point around the 133.500 level. And as you can see here this morning, we saw that price action took us out of all the buy positions that we had on this one, and it was quite a profitable trade for us this week on the USDJPY. And as we head into both the London and the New York session today, what is going to be our plans on this one? Now, if you look at the current market structure here on the 1 hour time frame, you would have noticed that since price action broke down the 133.500 level here, we begin to see selling pressure resume below that structure. And at this point in time, I'm not really sure if a sell pressure, a sell bearish momentum is going to be coming in at this point, or is this going to be a retracement of that impulse leg that started yesterday. So remember at the beginning of the week, yes, that was yesterday, we saw this impulsive move to the upside which culminated at the 133.870 level. And as you can see here, it appears that we are going through a retracement phase. We are not sure yet if this is a retracement phase, but it now depends on how price action reacts to the 132.800 and the bullish trend line here that will determine if it's truly a retracement phase. And for us to know that this is a retracement phase or know when the retracement phase has ended, what we want to be looking out for is to see how price action will be reacting to that structure. So if price action gets into the structure around the 132.800 or the bullish trend line here, and we begin to see buy pressure resume or a reversal pattern, probably in the form of a double bottom structure, something like this, then we want to be getting ready to buy to join the second wave of that bullish momentum. It could be a double bottom structure, it could be a head and shoulder pattern, it could even be a falling wedge at that particular point in time. But most importantly, we want to see a reversal pattern. Then we want to be part of the trend continuation as soon as price action breaks out of the neckline of that reversal pattern. So at this point, we want to be very patient here and see how far this retracement phase will likely go. But if at any point in time during the course of today's trading session, price action breaks down that trend line, then we might be in for a bearish move. But we need to be very careful here, as anything could actually happen. It could still turn out to be a bullish momentum as long as price action is unable to break the previous low here. So what we want to see here to confirm that this is not a retracement phase, but a move that is going to be negating the buyer's pressure around this area, is to see price action do a retest of structure. When you scale down to your lower time frame, you want to be seeing selling pressure below the structure, after which we will know that this is going to turn out to be a move that is going to the downside. So this is what we shall be looking at on the USDJPY today. So on the USDJPY, there is no trade running, but all we want to be doing here is just remain patient, monitor the price action. wait out to see how price action will be reacting with the 132.800, the bullish trend line here, in order to know what our next line of action will be. Then another thing about this current structure is the significant breakout of that resistant line at the 132.800 here during the New York session yesterday. And you all know from a technical standpoint that whenever price action breaks out of a key structure like this, we expect that at one point in time price will come back to do a retest of that structure. So that is why we still need to look out for how price reacts to the 132.800 to decide if it's going to be a trend continuation or if it's going to be an opportunity to join a bearish move to the downside. So these are things that we are going to be monitoring, and be rest assured that I will be with you right in the comment section of both my public platform to give you an update in that regard. So on this note, I want to wish you best of luck today. So it has been a wonderful moment, and I believe that we are well equipped with the knowledge we have here to be able to take advantage of any potential trading opportunity today. So we have tried as much as possible to simulate all the potential trading opportunities around the structures that we have been monitoring since the beginning of the week. So I implore us to remain very, very patient, wait out for the structures to mature before we want to be taking advantage of any trading opportunity. You can always chat me up on my TradingView platform to ask questions, and I will be there to answer your questions. Or my Telegram channel, you can chat me up so that we can talk about it as we continue to monitor this price action together. So I wish you best of luck today, and I look forward to seeing you same time tomorrow as we get prepared for the London and the New York session tomorrow. Do have a wonderful evening, everyone. I'll see you right on the public platform as we continue to monitor price action. Bye-bye.